Hello everyone, warm greetings from Kotak Mutual Fund. Today we are delving into the principles that can help you navigate volatility in the dynamic world of mid-cap stocks. Last 3 years has been phenomenal for mid and small cap investing, and various themes have done extremely well at different periods of time. By and large, investors are made to believe in risk-free return generation from such stocks. Caution is nowhere to be found and self-confidence is overwhelming. Many stocks, which were hitherto ignored for business or management quality, suddenly found lot of takers. While some of these companies have experienced genuine turnaround in post-COVID world, many stock prices have gone way beyond fundamentals. Some part of mid or small cap market is euphoric, with flows chasing the stocks with very little free float and feeble narratives. While investing in mid cap stocks, one has to have longer time horizon. You need to give equal importance to managing risk as you do for generating returns. Successfully navigating the cycles of greed and fear requires a disciplined investment approach, especially within volatile categories such as mid-cap stocks. For generating long-term returns, limiting drawdowns is as much important as capturing the upsides. Well, it's wise to stick to the investment philosophy and process than try to pick all sectors or stocks which comes in limelight from time to time. Momentum works in both directions. Liquidity can dry up quickly, leaving investors with stocks experiencing reverse momentum. We believe Kotak Emerging Equity Fund has been able to deliver decent performance over the years while managing the risk within acceptable limits. The fund is underperforming the benchmark in recent past, like you can see in this chart. Kotak Emerging Equity Fund's relative underperformance can be explained by these two factors. One, we are staying invested in companies with strong moats, with compounding characteristics, and chose not to participate in the rally in the high beta stocks. And second, we might have missed or were late in capturing some of the stocks where things have actually changed in last 2-3 years with COVID, war or government policies. Let me tell you, investing is a constant learning process and we are also making suitable changes in the portfolio within our boundaries to capture such structural changes. However, big part of underperformance can be explained by not chasing the momentum stocks, which have gone up based on narratives, lower free float and sizable flows chasing them. Our investment philosophy focuses on picking business franchises run by competent management. This ensures minimal mishaps to the extent possible. We are open to new ideas and remain abreast of changes, but try not to confuse those changes with stock price momentum. The fund has many businesses which has delivered consistently over long periods, also got re-rated and trading at somewhat expensive valuations. It pays to look at valuation through the prism of business strength and delivery. We believe in holding on to such businesses, compounding profits for years, capturing the wealth creation process fully, and not to disturb such holdings unnecessarily. In few cases, some businesses and hence respective stocks might go through a phase of consolidation or may grow at slower pace than other segments. But we look to hold on to such businesses or add to such positions as long as company's competitive positioning is improving. Well, overall, we would advise investors to be extra cautious going forward while investing in mid or small cap space. In most cases, there is no room for error. Many events are lined up like elections across the world, central banks' stance changes, and there is continued geopolitical uncertainty at multiple fronts. Kotak Emerging Equity Fund will continue to exercise caution in the current market scenario. Just zoom out and look at the big picture. Investment philosophy and style will not be compromised. We are going through a market cycle wherein risks are getting ignored. We have seen such periods of relative underperformance in the past as well. We believe such periods are temporary and rationality would prevail. Staying invested through a mutual fund scheme like Kotak Emerging Equity Fund in such markets can help investors navigate the volatility better than on their own. Wishing you all a very happy and safe investing journey. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.